have a confession. I almost ignored one of the biggest Cardano stories of the year. It was hiding in plain sight, but I was too busy watching prices and headlines. And the crazy part? It could be the factor that makes all the difference for ADA's future. This is a warning to every ADA holder out there, and a bit of a personal wake-up call for me too. Consider this our story, a journey from ignorance to insight. Let's dive in. It started on a late night, with me bleary-eyed scrolling through on-chain data and community chats. I noticed a statistic that made me sit up straight. Wait, could that be right? I muttered to myself. According to multiple sources, roughly 70% of all ADA is currently being staked, effectively taken off the market. Think about that. 7 out of every 10 ADA tokens are not on exchanges waiting to be sold. They're tucked away in wallets securing the network. Picture an iceberg. The price you see is just the tip, and beneath the surface, 70% of the mass is submerged out of sight. That's Cardano's supply right now. Most people aren't seeing it, and I nearly missed it too. At first, I shrugged it off. Sure, a lot of ADA is staked. Cardano's known for that. I thought. Staking in Cardano is liquid after all. You can unstake anytime, unlike some other networks. So I figured maybe it's not a big deal. But that stat kept gnawing at me. It felt like discovering a secret room in a house I thought I knew well. Why aren't more people talking about this? Over 71% of ADA's circulating supply is being staked by investors with strong hands, signaling massive confidence in the project. Meanwhile, ADA's price was just drifting, sleepy, around the same levels for months. It was a disconnect I couldn't ignore. The supply was effectively shrinking, yet the market acted like nothing was happening. That's when I fell down the rabbit hole of research, and what I found sent chills down my spine. In a good way. It turns out that since the start of 2025, nearly $1 billion worth of ADA has been withdrawn from exchanges. Yes, billion with a B, yanked off of Coinbase, Binance, you name it, and moved into private wallets. That's a huge chunk of the circulating supply being locked away into cold storage or staking, not sitting on order books. The last time we saw outflows of this magnitude was back in 2021, right before ADA rocketed to its all-time high around $3.10. Let me repeat that. The last time so much ADA left exchanges, the price exploded to a record high. And here we are again, $1 billion of ADA off the market, quietly echoing the pattern that preceded that 2021 run. I remember 2021's frenzy, but back then, I wasn't paying attention to on-chain signals. I was mesmerized by the hype and the FOMO. In hindsight, the signs were there. The supply was drying up, whales were accumulating, but many of us were too busy refreshing price charts to notice. I'll be honest, it feels like deja vu in 2025. Only this time, I refuse to be caught off guard. It's like we're standing in a store where 3/4 of the shelves are already empty, and a hungry crowd of customers could pour in any minute. What do you think happens to the price of the remaining loaves of bread when the shoppers arrive and find scarcity? They fight over them. They pay a premium. That's the supply squeeze scenario I see shaping up for ADA. Let's talk about those whales, the big players who hold mountains of ADA. While the average crypto enthusiast has been yawning at Cardano or even declaring it dead, the whales have been feasting. In one 4-day span in November, large holders quietly scooped up 348 million ADA, about $204 million worth. That single buying spree was nearly 1% of the entire ADA supply being snatched up in a blink. Imagine having the power to grab 1% of all ADA, and doing it while hardly anyone noticed. These whales treated ADA's recent low prices like a Black Friday sale. And they didn't stop at just one round. On-chain data shows this was the strongest wave of whale buying since May 2025, right when many retail investors were either complacent or pessimistic. I found a quote from an analyst that nails the situation. Millions of ADA are quietly being scooped up by whales and institutions. On-chain data shows the silence isn't weakness, it's precision accumulation. In other words, while the market's been snoozing, smart money has been stocking their ADA shelves nice and slow so as not to jolt the price. They're preparing for something. Ask yourself, what do they see coming? And do you really want to be the one ignoring the footprints of giants? Now, I know what some skeptics will say. So what? If the price pumps, those stakers and whales can just sell into the pump, dumping ADA back on exchanges. And that's true to an extent. Cardano's staking is flexible. and whales eventually take profit. But consider this. The very reason they're locking up ADA now is because they anticipate higher prices later. They're not pulling ADA off exchanges for fun. They believe these tokens will be more valuable in the future. It's a game of patience and conviction. When you stake your ADA, you're basically saying, I'm not touching this for a while. It's a statement of faith in Cardano and a bet that holding and even earning more ADA as rewards will beat short-term trading. So yes, that supply could, in theory, come back into circulation, but likely not until values are much higher. That creates a kind of delayed fuse on the supply. By the time a lot of these holders even think of selling, we might be in a very different price bracket. All this hit me like a ton of bricks. How could I, an ADA long-term believer, almost overlook such a massive bullish setup? It's easy to get distracted by the flashy stuff. New partnerships, fancy tech announcements, price predictions, but sometimes the quiet fundamentals sneak up on you. I felt a mix of excitement and, frankly, urgency. Because if so many people are ignoring this supply squeeze, it means the market isn't pricing it in yet. It's like a coiled spring that nobody realizes is under tension. And once it snaps, well, we could see some explosive moves. This might shock you, but I'm not a financial advisor and nothing in this video is financial advice. Cryptocurrencies are highly volatile and you could lose all the money you invest. Always do your own research and consult a qualified professional. Your investments are entirely your responsibility, and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses. This video is for entertainment and educational purposes only. All right, with that reality check out of the way, let's get back into it. I want to make something clear. Bullish setup or not, nothing is guaranteed. We're dealing with probabilities here, not certainties. But ask yourself, would you rather be aware of these probabilities or blind to them? I choose aware. That's why I'm sharing this with you, not to hype, but to inform and frankly to warn. Because if you're an ADA holder like me, you don't want to be the person scratching your head later saying, why is ADA skyrocketing? What did I miss? We want to be ahead of the curve, not chasing it. Let me paint a picture of what skyrocketing might look like in a supply squeeze scenario. We got a teaser of it earlier this year. Remember when the news broke that the US government, under President Trump, was considering ADA as part of a strategic crypto reserve? They actually named Cardano alongside Bitcoin, Ethereum, XRP, and Solana in a new national digital asset reserve. I couldn't believe it. ADA in the mix with the big guns at a government level. The result? The crypto market spiked. ADA's price jumped almost 78% in short order after that announcement. Think about that. One high-profile nod caused ADA to rip almost twofold. Why? Because suddenly everyone wanted in, and there wasn't enough ADA on exchanges to satisfy that burst of demand. That was a miniature supply shock in action, a preview of what can happen when even a modest wave of buyers hits a limited supply. Now, imagine a full-blown wave, renewed retail FOMO in a bull market, an influx of institutional money, maybe even an ETF approval down the line. Grayscale did file for a Cardano ETF, by the way. If any combination of those catalysts strike, we could see fireworks. I'm not saying this to get you overly hyped. In fact, let's temper this with some reality from my own journey. I've seen wild predictions come and go. I've held ADA through exhilarating highs and gut-wrenching lows. Being a long-term believer teaches you patience and humility. Cardano has had its share of criticism and doubt. It's been called slow, overhyped, even a ghost chain. And yes, progress has sometimes felt slow and steady. By design, really, we all know Cardano does things properly, not just quickly. But in the background, Cardano has been steadily growing and building. Just because the price was sleeping doesn't mean the ecosystem was. Over 1,300 projects are actively being built on Cardano as we speak. More than 105 million transactions have taken place on the network, and the user base is now millions strong. We even hit a record of $700+ million in total value locked in Cardano DeFi in 2025, a sign that people are actually using this blockchain for real use cases, not just speculative holding. So the fundamentals are not in question here, at least not for me. Cardano's tech is advancing. We saw the Hydra scaling solution achieve over 1 million TPS in a test, which is mind-blowing. Governance is coming online. 2025 brought us on-chain voting with Voltaire-era upgrades, and real-world adoption is underway. from digital IDs in Ethiopia to big partnerships in finance, even integration with national initiatives and standards like ISO 2022 for global finance. This isn't a ghost chain, it's a sleeping giant. But even giants need the right conditions to wake up and run. And that's where the supply squeeze comes in. Imagine lighting a match, new demand, in a room filled with dry tinder, limited supply. It doesn't take much to start a bonfire. The ADA supply on exchanges is that dry tinder right now. It's at one of the lowest levels we've seen in years. ADA holders have been pulling coins off exchanges en masse, either staking them or just holding them in private wallets. Only about 20 to 30% of ADA's total supply is actually liquid and available for trading at the moment, by my estimation. Circulating supply minus what's staked or hodled tightly. And even new ADA issuance is relatively low. About 80% of the total ADA that will ever exist is already out there, with the rest coming in slowly as staking rewards. So we're not going to suddenly inflate to reduce scarcity. ADA's supply curve is pretty well known and capped. This is fundamentally different from, say, a meme coin that can mint billions or has unknown tokenomics. Cardano's supply is transparent and finite, and a huge chunk of it is effectively off the market. When this realization fully sank in, I had to ask myself, am I doing everything I can to take advantage of this responsibly? I don't mean YOLOing into ADA with rent money. I mean positioning myself smartly for the long term. For me, that meant two things: continuing to hold and accumulate when I can, and making my ADA work for me. If you've been around this channel, you know I'm a big proponent of staking, and now you see why. Staking isn't just a way to earn yield, it's a statement of belief. When you stake, you join that 70% club of 80 believers tightening the supply. You earn rewards, compound your holdings, and help secure the network all at once. It's genuinely a win-win compared to just letting ADA sit in an exchange account doing nothing. That's why I set up the cheeky Cardano stake pool, ticker CHEEK, for our community, so we can all stake together and earn passive ADA instead of merely holding coins in our wallets. Staking beats holding idle ADA because you're gaining new tokens, around 3 to 4% APY typically, while still keeping control of your funds. Over time, those rewards add up, meaning when that supply squeeze-driven price pop potentially happens, you'll actually have more ADA to benefit from it. And beyond the rewards, there's a satisfaction in knowing your ADA is helping keep Cardano robust and decentralized. Another thing I've been doing, and this is more of a personal side adventure, is experimenting with new ways to support decentralization and earn along the way. You might have heard me mention Unity nodes. It's a side project I've been testing, and I want to briefly explain what it is, since I get questions about it. In simple terms, Unity nodes aim to turn everyday smartphones into part of a decentralized telecom network. Think of it like this. Instead of big cell tower companies verifying network activity, regular folks like us can use our phones to run verification tasks and get rewards for it. It's pretty wild. Your spare phone becomes a mini node that helps audit and support a telecom network on the blockchain. I'm starting with 10 phones to test how this works and if it's a viable source of passive income for the long run. I'm not going to overhype this. It's experimental, and who knows how it will pan out. But it shares the spirit of Cardano's decentralization, empowering the little guys to contribute and earn. If you're curious about Unity nodes, I've put a link in the description so you can check it out yourself and learn more. Again, I'm not saying this is the next big thing. I'm just genuinely intrigued and giving it a shot, and as always, I'll keep you posted on how it goes. Now, back to ADA, because that's the main story here. I mentioned at the start, this is a warning to those ignoring the ADA supply squeeze. Maybe warning sounds dramatic, but I think it fits. The warning is, don't let complacency or outside noise blind you to what's happening beneath the surface. It's easy to get caught up in negative sentiment. ADA's price is what? Down 50% year over year. Many traders moved on to chase shinier objects. Even some Cardano supporters grew quiet during the doldrums. I get it. It's not fun when your coin isn't mooning and others are. But I've come to learn that the moments of greatest apathy often precede the biggest moves. It's like the tide going out before a tsunami. The shoreline gets quiet, people think nothing's happening, and then boom. If you look at Cardano's history, after long flat periods, we've seen huge surges. 2017, 2021, 2021, ring a bell. And guess what usually characterizes those flat periods? Growing fundamentals and accumulation behind the scenes, just like now. In fact, historical analysis shows ADA often rallied 200 to 300% after roughly 10-month consolidation phases. We've been in one of those phases for much of 2025, quietly consolidating, base building. The stage is set. Let's also be real about risk. Could I be wrong? Absolutely. Maybe the squeeze doesn't play out soon. Maybe macroeconomic factors like interest rates or a recession keep crypto in a funk longer than expected. There are always variables. But even in a cautious scenario, owning an asset that A, has a committed community locking it up, B, has real utility and development, and C, is fundamentally scarce by design, that's an asset I'm comfortable holding through uncertainty, because then it's not if the value will shine through, but when. The way I see it, Cardano is a coiled spring. The more people ignore it, the tighter that spring gets wound. The more ADA gets staked and taken off the table, the more explosive the reaction could be when demand returns. Demand will return at some point. Crypto moves in cycles. Maybe it's sparked by the next Bitcoin halving cycle upping the tide for all altcoins. Maybe Cardano itself will deliver a killer app or a major adoption win that brings new users flooding in. Maybe it's just the rhythm of market sentiment swinging back. Whenever it happens, I want to be ready. I want you to be ready too. For me, being ready means staying informed and staying involved. I didn't make this video to spread hopium or tell you ADA is going to $10 tomorrow. I made it because I spent a lot of time learning these facts, and I realized how incredibly bullish this supply setup could be and how risky it would be to ignore it. Frankly, I felt a responsibility to share that, especially with fellow ADA holders who have kept faith through the rough times. We deserve to understand the full picture. One more thing that's helped me stay on top of insights like these is our community. We have a free Discord, link in description, where a bunch of us gather to talk all things Cardano and crypto every day. It's often in those community discussions that someone will point out a chart or an article like, hey, have you noticed how ADA exchange balances are plummeting? And that sparks my own deep dive. In fact, the early seeds of this very video came from community chatter about on-chain metrics. So if you're not already in there, come join us. It's free, it's friendly, and it might just give you that early heads up on the next big insight. Plus, it's a great antidote to the loneliness of hodling through quiet times. Trust me, sharing the journey makes it way easier. As we come to the end of this story, let's zoom out for a second. Investing, especially in crypto, often feels like riding a roller coaster blindfolded. There are twists and turns you don't see coming, but every now and then, you get to peek under the blindfold and glimpse the track ahead. I truly believe this ADA supply dynamic is one of those glimpses. It doesn't tell us everything, but it gives us a pretty big clue about a potential turn in the ride. And that clue says, the track ahead could be a sharp upward climb, if and when demand kicks in, because the carts, the buyers, will be racing on a track with fewer rails, sellers, than ever before. In my own journey, this realization has genuinely reignited my excitement for Cardano. Not in the naive sense of the number might pop tomorrow, but in the steadier, more grounded sense of everything is quietly lining up. It took me back to the reasons I got into ADA in the first place. It was never about overnight fireworks. It was about the mix of engineering discipline, clear direction, and long-term economic design that gave the network a real chance to create value over time. Cardano has always been a marathon, not a sprint, and the people still here, the ones still holding, still staking, still paying attention, we're the ones who signed up for the long haul. We didn't fold when the sentiment tanked or when louder ecosystems stole the spotlight. We stayed because the fundamentals made sense and the mission resonated. And right now, when I look toward the horizon, I see the early pressure of what could become a serious supply squeeze. The sort of setup that doesn't happen quickly, but when it does, the shift can feel sudden. That's why I want to speak to you directly, not as someone trying to hype anything, but as a fellow ADA holder and friend who's been in the trenches. Don't overlook what's happening beneath the surface. Cross-check everything I've mentioned. Run your own numbers, look at the chain data, question the narratives, all of it. But once you do, it becomes hard to ignore the pattern forming. The next time someone laughs and calls Cardano boring or shrugs it off as stuck, You'll remember that more than half the circulating ADA isn't even circulating in the real sense. You'll remember that a huge share is staked, locked up, or held by long-term participants who aren't flinching. You'll remember that accumulation often looks like nothing at all, until it suddenly doesn't. What the casual observers call boring is often the foundation being laid for something dramatic. As for me, I'm positioning myself with intention, staking the ADA I believe in, exploring new releases and tools in the ecosystem, staying engaged with the builders, and keeping an ear to the ground. This isn't about blind optimism or wishful thinking. It's about looking at the data, the behavior of holders, the economics of scarcity, and recognizing a setup that could become meaningful. And right now, the signals are louder than they've been in a while. Nothing is guaranteed, but the possibility for a major shift is real enough that I'm not going to ignore it. We started this conversation as a cautionary heads up, but I want to leave you with something closer to hope, the grounded kind. If you're holding ADA today, you're already part of this unfolding story. Just by staking and participating, you contribute to the very conditions that tighten supply and strengthen the network. You're helping write the early chapters of a potential reversal, whether you realize it or not. And if this story does take the turn I think it might, the payoff isn't just financial. It's the satisfaction of knowing you stayed focused when others drifted away. So, stay curious, stay plugged in, keep questioning things. Don't let the noise drown out the on-chain reality. I almost glossed over this trend myself, and I'm genuinely glad I didn't. I hope you won't either. We're navigating this together, paying attention, waiting for the next chapter to reveal itself. And if the setup plays out, it's going to feel pretty incredible to look back and know we recognized the moment while it was still quiet. Hit subscribe if you're holding ADA and want to stay ahead of the curve.